Good morning, everyone. Welcome to our Wednesday morning trading room. Pretty sure it's Wednesday today. I'm not a morning person a lot of the times. I got to think about this. All right, so we just had the NASDAQ market open up here a minute or so ago, and it looks like the buyers are on a bit of a tear out of the gate, a bit of a rally up. After a rather sideways session yesterday, we got an early decline, saw the market recover, and then fall off again going into the close. So overall, a little bit on the neutral side. Overnight, very, very quiet, and we are opening pretty much where we left off. Like I said, a nice little rally out of the gate. We'll see whether the buyers continue to press. I'm also watching the euro, dollar, and gold on my other monitor. But please don't be shy about asking for market if there's something you would like me to display for you. Now that the trend, or the very short-term trend, seems to be up, we might look for an opportunity to buy. It's still very, very early, of course. We did get this cloud crossover signal forming here on the Raptor. It may be, well, we'll see. Could get a little bit of follow through out of that. It's going to be safer to wait for a couple of minutes to actually let the dust settle some. Maybe look at a possible hard edge bounce or something like that. You see, notice all the signals that are produced through here. That's kind of telling me the market is moving sideways. The context since the overnight, so the last 6 or 7 hours, the context of the market has been very, very sideways. Here is a little bit of a breakout attempt, and we'll see now if that holds. The hawk working a possible 4-arrow consolidation, only got 3 arrows so far working, or 2 arrows so far, working the third signal right now. The Falcon also produced a trend change signal, and it's pulling back into the trend line a little bit. So some of that early momentum waning. Here now on the hawk, we've got a macro pullback, so there's an early entry opportunity for you. If you're really anxious to get into this trade, there is a possible trade for you right there. The macro pullback, of course, occurs when the micro line, that's the thin one, changes color. Everything else stays in sync, and we produce a signal. That is your macro pullback signal, called that way because it tends to pull back toward the macro line. That's this thick one. And I may, if we get filled here, oh, we did too, I may try to run this out a little bit. So let's raise those objectives a little. Where's my next profit zone? So 60.83 half, and after that all the way up to 60.90. All right, let's swing for the fences here. Let's see if we can't get this trade to go to 60.90. And I'm not going to be really greedy about it. There we go. And I'll roll my profit or my break even up as well. Again, this is very, very early. Normally, I don't like taking a trade the first half hour. Unless, you know, there's extraordinary circumstances. Well, we're getting a 4-arrow consolidation now. 1, 2, 3. This is going to be the 4th arrow printing. That's encouraging, because the 4-arrow consolidation is also a very strong formation. Well, so far, a good result on the trade. Maybe I should try to run it out even further. Okay, I can probably bring my stops up here a little bit. Below that last swing low. The buyer is making a very strong rally here, and it may be time to move into a slightly more aggressive stop strategy. Maybe even, gee, what do we think? Should I try to run this out even further? I'll go with the bar high-low strategy, and we'll only leave it a couple stops back, or a couple bars back. There we go. So we're getting a little bit of an early reaction now to the primary resistance line that we were looking at. That was on our support and resistance suite. So there's the line, we're through it. Here's the next line. The reason I chose 60-90 is that very often the market will move two zones before giving us a reaction. So we're over the median line right here, that's that gold line. So there's zone 1, here's zone 2. And they are so close. Sellers starting to gang up on me a little bit. Maybe I'll see about if we can't get back just above the high of this bar, right there. Got a pretty good little squeeze going on the market right now. In fact, I could squeeze it a little more and just bring it up a tick. So it's either going to finish above the high, or if it trades below the current low, it's going to stop me out. All right. Well, there we go. Nice little run up to start the morning. And that kind of sets the bullish tone for the day. Okay, here now that pullback in response to the breakout. And as prices move a little bit lower here, we're going to expect a reaction when they encounter the hard edge of the trading band. Oh, actually, things getting a lot more bearish here all of a sudden. The Falcon giving us a very early trend change signal to the short side. The Hawk now into red bars. And you could even take a look at this little raptor type signal as a very early number 2 signal. But I wouldn't get too crazy about shorting just yet. The buyers made a pretty big impact out of the gate. Yeah, way to go, Mark. Mark says, I took $400 from someone's account on that first micro macro cross and put it in mine. Yes, trading is a zero-sum game. Where most times we're actually trading against the institutions, not against other individuals. Although occasionally, I suppose, your contract's picked up by someone else, a private trader. Percent says, sure, Mark, rub it in. Percent wants his money back. That's funny. All right. So here we are, a little bit of a pullback into the hard edge. Getting a little bit of support on the median line as well. Okay, we're a little bit bearish here now on the Hawk and Falcon. The Eagle and the Raptor still on the slightly more bullish side. Hey, way to go, Percent. Percent says, I took 200 from someone on that down move. Which one did you do? Did you do the, well, I guess the Hawk, no, the Hawk would have been out of sync, so I'm thinking either the Falcon or the Raptor on that little counter trend trade. Yeah, on the Raptor. Good call. So it didn't print as a number 2 signal, probably because the retest wasn't high enough. But visually, you could have still saw that as a test of the extreme and the sell signal. Market almost recovering to the start of the morning. Percent says, I took it at the hard edge. I wish I had trailed the stop for more. You know what? That's trading. You never know where it's going to stop, and there's a reason people say stuff like a bird in the hand is worth two in the bush. At least you've got your profit. Yes, you could have trailed the stop at the hard edge now. Maybe picked up another tick or two. But remember, markets spend 3/4 of their time, 75% of their time, moving sideways in a rather sideways fashion. So the vast majority of the time you will always do better taking profit on target. Occasionally you're going to hit those days, those running days, like we saw a few days back, where the market picks a direction and it just goes and goes and goes. All right, those kinds of days you may get left out. But that's only going to happen 25% of the time. So on a typical month where there's 20 trading days, what is that, 5 days, 4 days out of the month? Don't forget about those other 16 days. All right, so the sellers coming in, pressing the market, making a new low. That's pretty crazy. Okay, so a brisk move lower, recovering the early rally. Yeah, we got ourselves a pretty evenly balanced market here at the moment. Now we're watching the buyers try to rally up again from near yesterday's lows. Yesterday's lows actually a little bit deeper. Where are they? Down here at just below 60 or around 60.59. And we have secondary support at 60.62 3/4. So we'll see what they try to do with this. I think that's a good call. Mark says another $300 on that first micro-macro cross lower. So this one right here. Mark writes, 2 days in a row where the market offered up my goal in the first 30 minutes. I'm hesitant to take any more and may just watch for a while. Good call. Nicely done. Good trading. Very good trading. I'm still looking for the overall direction. You know, we had the big push up, the big push down, getting a macro pullback here, which is saleable. Possible late filter entry. No signal yet, but the filter is out of sync. There's the warning dot, so they're trying to come back with a sell. My concern is, you know, there's obviously support here now. So the sellers, pardon me, the buyers have dug in near the low of the morning. So if I were to do this macro pullback, I think I'd be looking at taking profit on target. And it looks like I would have squeaked my profit objective out of the trade. And here's the reverse now. This is the part that I was concerned about, that this is going to turn into a test of the extreme and just take me out. Okay, we're back into the hard edge. Now we have the first micro-macro cross higher. The Falcon working a possible trend change signal, already had the early trend change signal. We could look at this Falcon trade that's going to develop right here. Pretty much got to cover it below the swing low. We're right in the middle of the daily range. There's the daily range. We're right in the middle. That's not my favorite place to take a trade. This whole zone right through here tends to be quite neutral, with most of the selling going on in the top third, most of the buying going on in the bottom third. Even though the signal is going to print here, providing, of course, it trades higher, it's a very neutral place to get into the market. So that's why I'm going to try to cover the trade below the lows, and it's not what I would call an ideal setup, but let's see whether or not the buyers can recover from what they started earlier. Mark writes, taking only a few high probability signals early and not hesitating on them when they appear has been successful for me for the last few months. You know, there's a lot to be said for what Mark says there, because you're never going to have all the details when you take a trade, right? There's always going to be that degree of uncertainty, and there's no two ways around it. It's just a part of the business. But to have the nerve to take the trade, to trust your signals, and then not to overtrade, that truly is a winning formula. I've said it before, but in a live trade room, I think people would be surprised how little I actually trade. I don't chase a lot of signals around. Here in the room, we got nothing else going on sometimes. I'll show you how a trade will work out. And this actually may be not that bad. We're getting a first micro macro cross higher now on the Hawk, so that's encouraging, even though we are in the middle of the range. But I like as many of my ducks in a row as possible before I put money down. All right, what happened to all that early momentum? It seems to have gone by the wayside. And not getting greedy, that's a big one too. That's one that takes people a long time to learn. Is you can be up, it doesn't matter whether you're up $100, $500, or $5,000. There's that temptation to always get back in. You see it among chronic gamblers. Where they've got a reasonable amount of winnings, but they just can't help themselves. They got to go back and play one more hand of cards or roll the dice one more time. And then when they lose it, they tell themselves it's okay because, well, I only started with whatever, I only started with $100. I only lost 100. No, if you were up 1,000, you lost 1,000. You didn't lose 100. That's rationalizing. And what do they say? Rationalize. When you rationalize, you tell yourself rational lies. So you can see the result of kind of getting stuck mid-range here. We're in a little bit of a sideways drift. If you can keep the emotions in check, you'll tend to do better as well. I know it's difficult, but you'll do better if you don't think of it as money. That's part of the reason I blank this out. When it has that dollar sign in front of it, now all of a sudden it starts to sting a little bit. Not 25 or 30 bucks, of course, but if that's at, say, 250 or 300, well, then I start to squirm on my seat a little. And I might make a decision that I'm going to regret. But when it's like this, it's just a real fancy video game. It's like a puzzle. It's like Tetris or Angry Birds or something. Dan writes, good morning, Eric. Well, good morning, Dan. I made some money yesterday on the early rally. Oh, sorry. Today made some money on the early rally. Good job. Yesterday, I guess I was gambling out of desperation. What is a good daily, weekly target for the beginner? Overall, I'm still in the hole. All right, well, let's see if we can't fix that. But for a beginner, your ideal daily target is to net two $50 trades per day. Now I know you're thinking, what? Did I hear that right? Two $50 trades? Yes, two $50 trades. Now we're talking per contract, and I know you're trading the Forex, so you're going to have to adjust your lot size accordingly. But the money is not made in the frequency. This is what baffles a lot of people. A lot of people come to trading and they bring along like a production line mentality, like a work mentality. I got to work more. I got to do more. Well, that's fine if you're working in the factory or if you're working in an office and you process more clients or you produce more widgets or you bang more nails. That's fine. That will earn more money. That is true. But it does not work that way in trading. In trading, you only get paid for being right. If you are able to be right 2 times a day, and if you are able to take $50 out of each of those trades, $100 per day, that means that on average, you will probably earn $20,000 per year because there's roughly 200 trading days in the year. If you would like to earn more, you don't earn more by trading more often. You still find those 2 high probability signals, but now instead of trading 1 contract, you trade 2. So now that $20,000 a year becomes $40,000. Still not enough money? Trade 5 contracts. Now you're making $100,000 a year. Still not enough money? Trade 10 contracts. And so on it goes. So it's not chasing the signals around wondering, oh, gee, I'm getting a buy signal. Should I buy here? Oh, I had a sell signal back here. Should I sell? Oh, I had another buy signal here. Should I buy? That's not how you're going to make money. You can see what happens when you get signal after signal after signal after signal. And I get people looking at a chart like this and they say, oh, the Raptor's no good. Look at all these false signals. Well, yes and no. Yes, it's producing a lot of signals, but really the signal is only a bad signal if your stop gets hit. So if I take a look at this number 1 signal and I take the signal and I can place my stop, I can afford to place my stop down here, well, it really wasn't a bad signal, was it? It got to its profit objective. Or if I look at, say, the signal to sell down here, and I can afford to place my stop up here, it's not really a bad signal yet, is it? So these things are kind of relative, but you don't want to get stuck in a trade like this. You don't want to be short from way back here, have to ride out a huge swing, and wait for the market to turn lower again. You want to wait for those high probability situations where you can take a trade with a reasonable amount of confidence. Where you can say, oh, right, here's a high probability trade. It looks like we broke out through the overnight highs kind of outside this trading range. I'll give it a go. So there we go. We set up our trade, and the market goes up, hits our profit target. Hooray! If I had allowed another couple of ticks for my commissions and fees, my day would be done, because this, of course, is on single contracts. As my account grows, because you don't want to end up risking more than you can afford to lose, right? That's a sure way to ruin your account as well. But if you can do this every day, you can, in theory anyways, earn all the money you want to earn. It's just a matter of how many contracts you can afford to put behind the signal. Because not all signals are created equal, right? Not all signals are going to give you that follow through. Like here, for instance, is a number, technically it's a number one signal to the short side. The Raptor has flashed a cloud crossover. It's a pretty messy cloud crossover though, isn't it? And not to say the market's not going to move lower from here, it's just that if you only needed to take 2 trades a day, would this be one of them? I would say probably not. I would say I probably would wait for something that looks a little bit better. Typically, after the first hour and a half, certainly after the first 2 hours of trading, the market should resemble or have some sort of trend to it. Again, this goes back to patience, and I know people hate to hear this, and a lot of times I feel like I'm preaching to the converted because everybody wants me to give them a magic bullet and where they could say, just tell me what to do and I'll do it. But they're meaning, tell me what fancy indicator I can put on my chart and I'll do that. Don't tell me to wait. I don't want to wait. All right, hold on a second here. I'm going to try to show you. Okay, so here is the NASDAQ on a 5-minute chart, and we'll just switch it here now to the regular trading hours. And actually, let's show the day break. All right, so here's yesterday's trading. After a couple hours in, so hour and a half, 2 hours in, it kind of puts us in this range right here. Okay, at this point, what would you say the market trend is? Is it up, down, or sideways? Class, what would you say? Would you say this is an uptrend, a downtrend, or sideways? Really? Nobody's going to play? Okay, Dan says sideways. Dan number 2 says up. Okay, getting a few sideways here. I would have said, and this is just my opinion now, that after, you know, the first couple hours of trading, I would say this market is probably exhibiting a little bit more of an uptrend, right? We got a little bit more of an upward bias. So at this point, I would be favoring any type of buying opportunity. So, you know, let's say, you know, bought a little trend line break or whatever. But you're going to find that there's going to be probably a little bit more follow through to the upside than to the short side. All right, let's do one more here. So here we are after the first couple hours of trading. Would you say the trend is up, down, or sideways? Nobody? The trend on this day, would you say we are up, down, or sideways? Okay, getting a few downs, getting a couple of sideways. Okay, for those of you who are saying sideways, I think you're focusing a little bit too much on the last few bars, right? You don't want this to be your chart. You don't want to be focusing on just the last few bars of trading. You want to be able to step back a little bit and get the bigger picture. And if it's hard for you to see from where you are, literally get out of your chair, step back from your computer a few steps and look back at your screen. Things tend to clear up a little bit. I would have said, this is the market open. After a couple of hours of trading, the market is down. So what does that mean for me? Well, that means I'm going to have a more bearish bias. I'm going to be looking at sell signals. I'm going to be looking at shorting opportunities. So even though there's a little bit of a rally here, do I care? No, because I'm looking at sell signals. I'm looking at a chance to get short. And this may be, you know, you'll have your appropriate Raptor signal or Falcon signal or whatnot. But this is what I want. I don't care that I missed all this. This is what I'm looking for right here. I'm just looking for that opportunity, the sure thing. How would you like to be the trader who never has a losing trade? You think it's impossible? It's not impossible. But you have to be ultra particular. It's not so much about forecasting, although there are, you know, people who are very adept at forecasting. But it's about picking your moment. This is, you know, trading's been equated to war before, but if you were going to war with somebody, if this was a fight to the death, you would pick your moment, right? You wouldn't just go in willy-nilly and throw a punch here, throw a punch there. You would wait for just the right moment to strike, and there's your moment. This is what you want to take advantage of, that move right there. All right, let's do one more. Oh, can't. I don't have enough data. All right, well, here, we'll just, okay, 1 second. Okay, now I'm gonna move this out of the way so that you can't see what's coming beforehand, and I'm gonna scroll this back a little bit, and we're just gonna pick up our spot. Okay, 1 second. I'm just trying to scroll the chart over. All right, here we go. Okay, what do we think? Up, down, or sideways? Okay, Dan says up. Oh, hey, you guys, everybody's catching on. I'm getting a lot of ups. And the reason I chose this segment is it's not just what's going on this day, but look at what happened the day before. Yeah, I would agree. I would say this market is full-on bull mode. So what does that mean for me? Well, I'm obviously going to be a little bit more bullish today, aren't I? So I'm going to look for buying opportunities. I'm going to be more interested in my buy signals on all my tools. So when we get, you know, let's say we get a number 2 signal, and this is our day right here, right? And we get a buy signal, even though it may not look like much currently on the Raptor. I would say, well, I know the overall trend seems to be up, so I'm going to take that buy signal. Or even when you get these secondary buy signals, the Raptor is saying all the market conditions have been met for a buy. but it doesn't qualify as one of our high probability signals. Well, if you're looking at your chart a couple hours into trading, or an hour, hour and a half, 2 hours into trading, and you see this as an uptrend, well, you'll be a little bit more receptive to those buying opportunities. And then, you know, you're going to get these kinds of moves. You may not get the monster move to the upside. You know, there's a lot of overlap in these bars, but who cares? So long as you're able to capitalize in here somewhere with a high probability trade, take your money out and just wait for the next opportunity. That's how you make money trading. You don't make money trading by, and this is what most people think. They think, oh, okay, well, I'm gonna buy here, and I'm gonna sell here, and I'm gonna buy here, and I'm gonna sell here. You look at all these software vendors, and this is actually where I give Adam credit, because he doesn't do this. But you come across those emails you get in your inbox, you know, a new trading system performs 92.7% of the time, or something ridiculous like that. And you look at the chart, and they capture every single swing. No, not going to happen. They cherry pick that chart, and the ones I really like are the ones that get these little mini swings in here too, right? Look at all the money I would have made had I bought this person's newsletter or new software or whatever. Yeah, we caught all those swings. Yeah, sure you did. You caught them all in hindsight. You didn't catch them real time. We're trading real time. As Ray Burke always used to say, trading the left side of the chart is easy. Trading the right side of the chart, not so much. So the whole point of my little rant here is that you got to pick your moments. And as a beginning trader, you're going to do better by setting a trade quota for yourself. Personally, I think trading 3 or maybe 4 times a day is ideal, because it's very realistic to go 3 for 3. It's even possible to go 4 for 4 if the market conditions are right. But again, if you're just starting out, you can go just once, just trade once a day. You know, like we were looking here. Go once, get your high probability target, maybe stretch this another tick or two to get your commissions and fees covered in there, and you're done. You're one and done. So the market goes up here to 60.88. Big deal. Because one day, if you do that, there's going to come the day where you can do it this way. Oops, are you going to be all in? Stop it. There's going to come the day when you can do that. And after that is going to come the day that you can do this. And, you know, if making $1,000 a day still isn't enough for you, it's all in the math, right? Well, when you get to the point where you're trading 20 contracts, the NASDAQ, you may start to put a little bit of slip on the market. You may have to start looking at the E-mini or even scaling in. But this would be a nice problem to have, wouldn't it? But it's a process. You can't get there without getting the consistency first. You can't get to that $1,000 or $2,000 a day target without first being able to earn $100 a day. Hey, way to go, Prasanth. Prasanth grabbing another $200 on the NASDAQ. He says, I'm done for the day. Got to run. We'll see you later, Prasanth. Dan's asking, so today, do we have a downward bias? Well, it almost seems that way, doesn't it? I closed my chart up. I should actually just leave one of those open. 1 second, I'll build another one. What was that? Was that a 5-minute that I built? I think so. Now, the overnight session a lot of times will kind of blur the issue. So many times what I'll do is I'll go away from the 24-hour session and I'll look at the regular trading hours. Because for a market like the NASDAQ, that's where all the action is. And let's throw in some daybreak lines. So here's the big picture. Yeah, we could have a little bit of a downward bent. I think we're consolidating. I think we're moving overall in a broader sideways range. So what that means is when we get toward the bottom end of the range, certainly the bottom quarter of the range, we can anticipate buying. So as we get down here, it looks like the buyers are prepared to step up. As we get into the top end, we can anticipate some selling. Here in the middle, we're dead neutral. So knowing this, if we're looking for a buying opportunity and we get a buy signal right where we are here in the middle, it's not all that inviting. Now, if it sets up on the on one of our tools, say on the Raptor, so that it looks like a really good buying opportunity. You know, let's say we're working a little bit of the cloud crossover. Let's say the clouds cross really nicely. We get a nice pullback. I would give that a go because of the Raptor. But chances are I'll get a better buying opportunity as the market tries to retrace a little bit lower here. On a little bit of a pullback, I'll probably get a better buy. If I had that same #1 cloud crossover form down here somewhere, it would probably be a better looking signal. Conversely, if the market rallied, and let's say I produced a #2 counter trend signal up here somewhere, that might be a little bit more inviting because I know the sellers are up here. How do I know? Well, we've made a series of lower highs. We can even draw a trend line across there and shoot a trend line across the bottom here. Just reinforces that whole consolidation that may be happening. So yeah, if you're having trouble discerning the overall market trend, just take a look at the 5-minute or a 15-minute chart even. Oh, need a few more days here. And just step back and, you know, try to keep an open mind. At this point, I might say, this part, the market is definitely in a downtrend, but it's also finding some support. So this may be a very, very broad trading range. over the next few weeks, we could see a little bit of a rally. If we get back somewhere near the highs, we could see another sell-off, right? Because this is where the sellers, this is where Goldman Sachs is sitting. You're sitting up there, they're sitting down here, and they're waiting. Before they put their tens of millions of dollars at risk, they want to make sure that the market is in a zone where they can get a better feel for which way it might go. Today is a little bit tricky though, Dan, to answer your question. I think the immediate bias, it looks like we're making a little bit of a recovery here, and we may get back up to around 60.80, and then I think we're going to see the sellers try to hop on this short-term trend line that we're looking at. But being in the middle of the trading zone, the trading range of the day, it's going to make things a little bit more difficult. Mark, you dog, you. Mark says picked up another 120 on crude. Now I'm done. Dan, number 2 is asking if you add more data, could it be a Head and Shoulders? Yes. Yep. You can. The reason these types of formations and patterns take hold is because they do repeat. And it's okay, and you can see these things even on your mean Renko bars. You don't need to go to a time-based chart. This is why I talk about things like test of the extreme, where the extreme in this case is the low, we look for the retest, and then we see the failure. Well, if we take it a few bars earlier, somewhere in the history of the chart, there's going to be another little swing low. That's how you get your upside down Head and Shoulders. Or if this were going the other way, you get your right side up Head and Shoulders. But the principle remains the same. We have an extreme price. We have the market coming up short. It's failing. The trend is failing. When the trend fails, we have a pretty good idea which way it's going to go. The problem most of us run into is we're not prepared to wait for this part. We want to get right into this part here. And that ends up costing us money. Dan asks, can we use the ultimate support and resistance tool to identify these zones? Yes. The ultimate, okay, a couple words about the ultimate support and resistance suite. That's an assortment of 21 support and resistance lines, which are forecast for today's trading. Most of the times, the lines can be pretty darn accurate. Today you can see they're almost bang on the number. But what you need to remember is that these are forecasts. Anytime you forecast something, anytime you're trying to predict the future, there is a certain degree of error. So you should not take these lines as being carved in stone. If we're down here at the primary support zone now, if we get a rally up through here and we get a buying opportunity, you could interpret that as an early cloud crossover or even a hard edge bounce, and you may choose to, and I'm just pretending where the signal will enter now, you may even choose to cover on the other side of the primary support line and use the next resistance zone as your profit objective. These lines are noteworthy, but like I said, they're not carved in stone, because there will be times that the market will either bounce around them. So obviously there's some sensitivity at this price level, but you can see that it didn't contain it higher or lower. It kind of skewered it. So the whole 60, 69 half zone balanced the market. And then other times prices will come and hit the number right on the mark. Okay, there it is. Hit it right on the mark and then react. I like to use them as profit objectives. You know, if I'm trying to stretch out a trade, I'll look at them as a possible profit target. Thanks, Scott. Scott says the lines are amazing, a must-have. What all do the lines look at? Well, I'm quite proud of the lines. They took a long time to develop, and I'm pleased that they work as well as they do, and that they're as well received as they are. It's one of those things I could tell you the math behind it, but then I'd have to kill you. Actually, what it does, the support and resistance suite, the math behind it is it looks at price sensitivity. It factors in momentum, you know, how much a market is moving. And then from there, it makes some calculations and it forecasts where the market should find resistance next. Just checking here to make sure I haven't missed anybody's question. Hey, way to go, Marlene. Marlene says I took that first micro macro cross on the hawk, hit its profit target. Well done. Another way you can use the support and resistance suite is the median line, the gold one, tends to print in the middle. So technically, if the market is below the median line, we have a more bearish bias on the day. I tend to wait for the market to get outside of the primary resistance or the primary support. Those are the blue lines, above or below. So if we get below the primary support, I'll tend to have a more bearish bias on the day. If we get above the primary resistance, I'll tend to be a little bit more bullish on the day. But like I said, the whole point of my little rant there was just to drive home the point that you don't need to trade a lot, but you do need to try to pick those opportunities that you think will have the highest probability of success. Yeah, like Andrew says, it's like chess. You look before moving, you look for potential danger. Yeah. Scott says, isn't never having a losing trade easy? You just never trade again? Yeah, Ed Sequoia said something like that, where he said, if you don't want to lose money trading, stop trading. And this is from one of the most successful traders of modern times. I mentioned Judah Toussaint the other day. He was a trader back, I think, 1880. Never had a losing trade. Never, ever had a losing trade. All right, so it looks like we're waffling a little bit here. The seller's going to take a little a kick at the can now. Again, a very sloppy cloud crossover. This one worked out, just to make a liar out of me, and this one worked out. But they're not really, you know, like the textbook variety. The clouds cross, you get a pullback, the market pushes the price out in favor of the new direction, and then you get some follow through. While both these signals are technically cloud crossovers and both signals did work, this one actually a little bit stronger because you could interpret this as a test of the extreme as well. Not really what you would look at as ideal. Yeah. Dan says, how the heck are you setting up trades when the market moves that fast? Yeah, it can be a little bit of a problem. Wow, look at that. We're actually getting some follow through. Okay, well, now we have our bias, don't we? I think now we can safely say the market is in a downtrend and we can look to trade it as such. Oh, maybe I jinxed it. Maybe I spoke too soon. The difficult part for new traders is the sitting and the waiting. That's the part that drives them crazy. They see the market, you know, explode to the short side and they want to reach for that sell button. And half the time the trade that will probably work for them, and so they become emboldened and they do it more often. And in the end, it just ends up costing them. Well, I wonder now. Had three legs lower. Here's one, here's two, here's three. That's kind of the limit for a directional move. I wonder, maybe the sellers aren't going to push the market much lower. Dan asks, so would you just hit the buy and sell buttons in these fast moves, or is there a tool in the trade manager to support the proper setup of stops? If you have your trail indicator enabled and you hit the sell button, you'll see that you automatically get a stop where your stop strategy is displayed. All right, so long as you have that turned on, you'll always have a stop in play. The thing about those fast-moving markets is I almost think sometimes the market does those little bursts to try to snooker people into grabbing their buy or sell market buttons and get them in on the wrong side of the trade. I'm always leery when the market explodes to one side. And we're not talking about a sustained trend now. We're talking about what we just saw, where it just goes boom, 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 you know, comes down. This all unfolded in like 20 or 30 seconds. Just enough time for everybody to reach over and hit sell. Don't be surprised to see the market start moving the other way. We are just below yesterday's lows now, so that would be where the buyers picked up the market from yesterday. But we'll see. Maybe we're going to get a retest here and come back with a number 2 signal. Like I said, if your objective is only to find a couple of good trades in a day, you don't have to be chasing every signal. So if everybody's short, where are they going to try to squeeze them out? I think what we're going to see is a little bit of a move here. That will entice everybody who got short around here somewhere, and their stops are up here. That will encourage everyone to bring their stops down to there. That way, if you get the market to reverse and run back up through the highs, you're going to take out all those stop orders, and that could lead to a little bit of a rally, actually. Like I said, in some respects, trading is really just like a great big game. Phil Ivey, the famous poker star, was always fond of saying, if I think of it as money, I'm sunk. He's betting hundreds of thousands of dollars on a hand. If he actually sat back and thought about how much money he had in play at that moment, he wouldn't be able to think straight. Scott's asking, did anyone take that number 1? No, I think it unfolded a little bit too quick for most of us. It printed, and then within a few seconds it was already way down here. If you saw it print and you just happened to be at your buy or sell control panel, you could have sold it short. We're into yellow bars on the Raptor. Got yellow bars on the Hawk as well. The Falcon already trying to make a trend change again. So today's the kind of day where we're getting mixed signals. You know, the Eagle's still bearish. The Hawk is trying to get bullish. The Falcon's trying to get bullish. The Raptor also into the hard edge. So it's certainly a more difficult day today because the market indecisive. But if we did deem this to be a bigger trading range, then we're in the bottom end of the range now, aren't we? So to expect a rally is not unreasonable. You're going to find some days are easier to trade than others anyhow. Some days will just be plain difficult. Yeah, Andrew says crude inventory was a non-event. It seems to have been that way for the last few months, last 6 or 7 months. All right, so it looks like the seller's stepping in here near the hard edge. So everybody who got short around here is now moving their stops above that high. Volume is probably off a little bit too. Volume has been terribly light of late. Just not a whole lot of market participation. All right, we don't have a signal on the Raptor yet, but we do have a green bar sell on the Hawk that we can actually buy the failure of that, and I may aim for a little bit more on this one. Now the green bar sell tends to develop near the end of the trend, and it is a counter trend signal, so stops need to go below the swing low. You can also use it as an early warning and just wait for that first micro macro cross higher. Marlene asks, would you not take the Falcon if it produces a buy signal? Yeah, the Falcon's doing a trend change signal. It's the same kind of thing. If the Falcon produces a trend change signal, the Raptor is going to produce a number 2 signal. The Eagle will still be bearish, but that will be the last one. The other tools will have more of a bullish bias to them. But here too, we're getting into the lunch hour, so it's not the ideal time to be trading. And you know, if I were looking back on the chart, like we were doing our little exercise earlier, I would probably say that the bias today is down. So I should be looking at more selling opportunities. So here's a number 3 signal that you could look to short on perhaps a second push, where we've essentially got the market pinched now. It's pinched between that swing high and that low right there. So I suppose you could even do an OCO type order, or you could short below here. Oh, I don't want to sell 20. That might be a little high. So you could short below here. You could buy above here. And that essentially is your trade. So now we're short. I'll get a stop in play. Nope, won't use that one. How about this one? And that's just my initial stop, right? I can adjust it. Now that I have a stop in play, I can make adjustments to it. So maybe bring it in there. I can cancel my hawk trade. And hopefully we get a little bit of follow through here to the short side. Yeah, definitely. Marlene says it seems the earlier trades these days work out. It is pretty much the first hour of trading that you're going to get your best opportunities. Sometimes at the top of the hour now, we'll get a little bit of a break as traders get their orders in and then take off for lunch. But you're right, it seems like all the action is coming early. Okay, this is close enough for me now to these lows that I'll probably force the trade to break even. Just hit the break even trigger anyhow. You can see there's no profit target when you use the OCO order. You can manually set a profit target by right-clicking on your chart, and you can select, in this case, a buy order. That's going to offset your sell. And I would look at the next zone here as a profit-taking objective. Dan asked, why would you not take profit there? You certainly could, Dan. There's nothing wrong with it. I think we've just hit our high probability profit objective. Yes, we did. I'm going to just try to sneak a couple of dollars out of this, see if we can't get to the next zone. Okay, now I'm going to get pretty tight with this trade. There we go. That's all you get. Hooray for me. So now that we're down here to the next zone, we can anticipate a reaction. So you see there was a reaction at this zone. So once we broke that, like I said, the market has a tendency to move two zones. So when it reacted up here, there's zone 1 and here's zone 2. We'll probably get a reaction now. Ooh, Paul says the YM futures have dropped 100 since the open. Yeah, I think it's definitely a bear day today. And, you know, like I said, when you kind of step back a little bit and take the broader view, pick your moments when you're going to get in. Trading can be a lot easier that way. Now, that's not to say you're always going to be right, but so long as you're right more often than you're wrong and you bank some profit at the end of the day, you'll probably end up doing okay. And like I say, after that, it becomes a numbers game. Okay, that's probably it right now until the next pullback. If you're going to continue to trade this afternoon, the trend is down, so look for shorting opportunities. A hard edge bounce would be nice. Probably going to have to wait almost an hour for that to develop, so don't be in a big hurry for that. Otherwise, thank you. Otherwise, you know, the market could just keep flip-flopping back and forth here a little. And as you can see, we're getting, again, a little bit of a reaction here now to this support zone, now that we've hit 60.45 half. All right, gang, I'll touch base with you tomorrow. We'll talk to you then. Bye for now.